Okay, what are you saying, people, and welcome back to your favorite YouTube channel. So today, guys, we'll be talking about how to swing trade. If you don't already know, I am a swing trader. I swing my trades, and I'll just be showing you my view, my approach to swing trading. I'll be doing more in-depth videos in the future about swing trading, the different components of it, how to spot trades, manage trades, forming your bias, all that technical stuff will be coming in the future. So hit the subscribe button to stay on the lookout for those videos. But today it's going to give you a good introductory kind of welcome into swing trading, my approach to swing trading, my ins and outs with it. And I'll run through some charts to show you my kind of methodology of swing trading in a second. But like I said, I'm a swing trader. I take around 3 trades a week. Sometimes it could be a little bit more, sometimes it could be a little bit less, depending on market conditions and the pairs that I'm trading. The pips that I look for can range a lot as well. It depends on the pairs that I'm trading. I do trade a wide range of pairs. I do create a watch list every week of a few pairs to kind of focus myself into a few setups. But sometimes I could be going for 100 pip targets. Sometimes it could be 400, even more. Again, my stop loss does vary as well. Sometimes it can be pretty low, 20, 30 pips. Sometimes it could be up into 90, 100 pips, depending on the setup. So, you know, it does vary. But 100 plus, 400 plus sometimes is my pip targets, and how long I hold my trades is about 4 to 5 days about for the winners. For the losers, it could be a few hours if it just goes straight in the other direction, or maybe a day if it consolidates and then goes and fails. So day for the losers, 4 to 5 for the winners. Again, could be longer, could be a little bit less. But yeah, the way I approach swing trading is very kind of simple. Identifying structure, I've got videos on structure in the description, but yeah, identifying structure, taking advantage of the swing highs and swing lows, coming up with a bias and trading in that direction. So hopefully that all made sense to you. Again, swing trading as well, just a little disclaimer, well, not disclaimer, just a little side note, because I know a lot of people coming into the market kind of stay away from swing trading because they see it as long term, you know, profit's going to be less, day trading is where it's at. Day trading is very good, but swing trading is good as well. Again, you can be aggressive and you can be conservative with day trading, and same thing for swing trading. You know, you can just make as much money with swings as you can do with day trades as well. So anyway, back to the video. So I'm going to go onto the markets now, give you a brief analysis to how I view the market, and then we're going to go into the live market, take a look at pound JPY, map out some swings and how I'll look to trade it. So hope you guys find this video useful. Any questions or anything, leave it down in the comments. But without further ado, let's get straight into the video. Okay, right guys, so welcome to the chart. So I'm just going to share with you my approach to swing trading and how I keep it very simple. So there's 2 main structures I'm looking for in the market, simply bearish structure and bullish structure, bearish trend or a bullish trend. And I'm just looking to continue that trend until the trend tells me otherwise. So, and I've done multiple videos on market structure, so if you want to check that out, links in the description. But right now I'm just going to talk to you about my swing trading approach. So for example, we've got bearish structure here on the left with lower lows and lower highs, and on the right here we've got bullish structure with higher highs and higher lows. And as you can see, these are the market swings. We've got bearish swings and bullish swings in both structures. So with swing trading, my approach is simple. You need to find a bias to the market. That's the first rule. Find the bias. You know, whether you just toss a coin or you analyze the market through multiple time frames, candlesticks, key levels, you know, trend lines, using technical analysis to come up with your bias. That's up to you. I'll do videos on that in the future. But you need to come up with the bias, and whatever happens, you need to stick with that bias, because it doesn't matter if you're a bear in the market or a bull in the market, and it doesn't matter what the trend is. You know, everyone can still make profit. It's just that if the market is, say for example, bearish and you're a bull, you're going to have to be a little bit more conservative with your trades, not push the trade targets too far, and be a bit more conservative with your entries. You can still make money with these pullbacks, of course. Obviously the bears will be making more money because the trend's obviously down, there's more pips to catch to the downside than there is going up, but you can still make money as a bull. And when the trend reverses, that's when you see most of your money come through anyway. Same thing with a bullish market. You can make money as a bear, selling the retracements, and you can make money as a bull. So the key thing is coming up with a bias, because the market has a lot of fluctuations, goes up and down. You know, it can be a bit confusing and deceiving at times and make you want to change your bias too much, and you don't know which direction you're trading in. So the key thing is to come up with the bias. And when that is done, it's simple. All you're doing is looking for opportunities that are in tune with that bias. So for example, say we've got bearish structure here with lower lows and lower highs. And say right now we've got a pullback in the market. Say I'm bearish in this market, that's my bias, bearish. This here is our lower high and this here is our lower low. Now, let me just mark it out a little bit more clearer for you guys. Now, so the approach to swing trading goes as follows. Eventually the market will have to take out either this lower high or that lower low. Eventually, no matter what happens, that lower high has to be taken out because of liquidity. The market needs liquidity to move. So eventually the market might consolidate, might go up and down, dance, whatever in this area, in that range. But eventually it will have to come out and take, or at least test. It will come to one of those levels eventually. It might bounce from this level and come back down and bounce from that level, maybe start arranging. But eventually one of those two levels will be taken out for liquidity. So our job is to come up with that bias. Say for example, I'm bearish on this, so I'm going to be looking for sell. So as long as we don't break through this high here, no matter how high we pull back or where we pull back into, I'm only looking to sell the market. So say the market comes up here, identify a key level, maybe say this lower low there as resistance, I start to sell, the market goes down, maybe it comes back up against me, takes me out break even or a loss maybe, but it doesn't matter, I'm still looking for sells. And say the market comes up to those highs and then it reverses and I sell again, that's when I'll be rewarded with that swing. Because when you start to view the market as swings, you know, the market can either do one or two things, a bullish swing or a bearish swing, and you just have to pick that bias and see it through until it is wrong. Say for example, this doesn't happen and the market just rallies straight through that high there and I was completely wrong, then it looks like the trend is changing. I wait for a pullback, identify my next lower low and lower high, come up with my bias and trade in that direction until I'm correct or I'm wrong, or the market changes or the market structure changes. So that is the theory behind it, keeping it very, very simple, because the market does have to liquidate, you know, take out the highs and lows eventually. So you're either going to be right or you're going to be wrong. And any opportunity you see in line with that bias, you want to be taking. So hopefully that made sense to you guys. If not, let me know in the comments. But I'm going to move on to some real life examples on pound yen, showing how you can come up with a bias and take advantage of both directions. Okay, right guys, so welcome to pound JPY on the daily time frame. So I'll be just going over a very simple but powerful concept which works very, very well for swing trading. Now we'll be focusing on the price swing high or the price swing low, depending on the structure, and basing trades from those areas. So if I just draw out the bearish structure real quick, we'll be focusing for pullbacks into our price swing low, which just gave us that most recent swing high, which gave us that most recent swing low there. And for a bullish example, we'll be looking for pullbacks into our price swing low, which gave us our most recent swing high up there. So pullbacks into these areas as well, we'll be looking to base trades from. Again, a pullback can necessarily happen anywhere between the high, most recent high, and the low. So we can pull back anywhere within here and continue, but we'll be focusing on pullbacks at the extremes of the structure, at the extremes of the trend. Reason being, these are the levels where the market should respect if the market does want to continue in a bearish direction. For example, for here, the market should respect that level. You can obviously false break, you know, wick above that level, but as long as it doesn't break through and retest that level and it comes back underneath, we expect this level to hold and the market to continue bearish back down to lows or some new lows. And in this example, we expect price to hold that support and carry on back to highs or new highs. So these are where we're going to base our trades from. Obviously, this is just one concept for swing trading, but it works very, very well, because if we can hold these levels, you know, these are the levels where it's either the market goes bullish and reverses, or we hold and continue our trend. So if you look at pound JPY here, as you can see, it's been trending to the upside for some time now. This is borderline consolidation, but ever since from down here, actually from 2020, we've been trending to the upside for quite a while here on the daily time frame. And as you can see, there's multiple highs, lows, pullbacks, etc, etc. But the key thing we want to be pointing out as swing trading is mapping out the higher highs and higher lows for a bullish trend, for example. And then we want to be basing our trades from these areas, because these are what contain the market, gives us our range to work with, and we can base trades there, put stop loss below these levels, and actually look to maximize our risk reward if we can get trades in these areas. So as you can see, we've got a high up there, a low, high, low, high, low, and the market just pulled back into these areas. We had 1, 2, 3, 4 attempts to break through but failed, and then we had another push to the upside, giving us higher highs past this point. Then we had another deeper pullback into that same level, into our recent swing low, retest that level, push the upside, higher, low, and then from that we formed some new highs. So these areas are very, very powerful. Again, this is a daily time frame, but it works with all time frames. And again, the market won't always pull back into these areas, because we do have our fib levels, 0.5, 0.618. You know, the market will not always pull back into these levels, but when they do, and we get our signals, our price action, they do make for very, very powerful trades. You can see here as well, the market stacked into this level here. If I drop to the 4H, it's probably be a little bit clearer than the daily. But all the market has done is just pull back into our recent swing low, respected that area, and continued in our direction. So the advantage of us knowing this is that we can base trades from these areas and keep our stop loss in very, very well protected areas. Because if our stop loss gets hit, as long as it's not a false break, the market's probably going to reverse anyway. So we want to be changing our biases anyway. So if we can base our trades from these areas, place a stop loss here, we can be protected and really take advantage of the swings in the market, depending how far you want to push the trade, whether it's back to highs or you think the market could go even higher. Basing trades from these areas puts you in that position where you can maximize your targets, your pips, and keep your stop loss in safe areas. You can see another example here as well, back into the most recent swing low. We've got the high up there, newly formed, push that into that low, new high, retested that prior low, and again another push to the upside. And again, the exact same example happened again there, as you can see, pull back into that same level which was just formed, new high, higher low, and again another move to the upside. And you can just about argue here as well, another push into that recent swing low and more highs off the back of that. So a very powerful pattern that happens time and time again, and is always going to be a great place to place trades, because structure is not going to change. The market's always going to form higher highs and higher lows. These are great places to be placing your trades on and placing your stop loss underneath or above, depending on the structure, to keep it protected. So hopefully that was useful, guys. I'll be doing more videos on different kind of entries, trade management, ways to analyze more complex structures in the market for swing trading. So do look out for this. This video is more of an introductory to swing trading and give you a good concept to work with and back test with. So hopefully that was all useful. Any questions or didn't understand anything, let me know in the comments and I will get back to you. But yeah, guys, hope you have enjoyed the video and I will catch you in the next one.